Okay, traders. Yes, so welcome to the weekend analysis. It is another day and another weekend. So as usual, I'm going to provide a quick analysis on gold. So this is Gold Spot, and this analysis is for 29th of July up to the 2nd of July. So it is just for the last week of August. The last week of July and the first week of August. So we expect to have NFP on the 2nd of August. So actually we know they are the high impact news, so this technical analysis may have less influence to the fund that are expected to happen on the 2nd of August. So actually this is going to be a top-down analysis from the monthly time frame. Then I'll be going down to 4-hour time frame, and in 4-hour time frame is where I provide an exact probable direction now for the coming week. So make sure that you watch this video until the end. So I'm in a monthly chart. We can quickly see what are the key points or the key highlights in a monthly time frame. So first of all, we see now monthly candlestick opened with a stronger bullish momentum, and I hope I explained this in my previous two analysis. I related with these previous candlesticks that opened with a bullish momentum, then later sellers came in pushing price to the downside. So we see at this almost the same level, we see sellers have been entering the market and pushing price to the downside. So I was expecting the same thing to happen in the current monthly candlestick. So actually we still have 4 days for the monthly candlestick to close. So it may close with a further push, or it may return slightly to the upside. So we'll see in lower time frames now what is the most probable direction. But all in all, we see sellers, they are almost controlling direction of the price in monthly time frame. So quickly in weekly time frame, we can see the highlights. Basically weekly time frame has few things to consider here. We see there's a level running straight to the downside, so we have this trend line to the downside, and now this weekly candlestick has respected this level to the downside. So now this may provide a possibility of price rejecting to the upside, and we see there's rejection from the lower side of the weekly candlestick. So there's possibility of price continuation to the upside. And also at the upper side, we see there's also another trend line, and price has been touching this several times, and the previous week returned exactly at this level. So actually price is respecting this channel. So the next move is possibly expected to touch the upper channel of this, the upper level of this channel. So anything is possible in weekly time frame, but mostly we are looking up for the idea of rejecting this lower level of the trend line. And also we can see now we can see in a bigger picture, we are looking for completion of the fifth wave to the upside. So it is very rare to expect that. This was the fourth, and the current push to the upside is already completion of the fifth wave. So it is less likely to be in that way. So possibly there is another push to the upside in order at least to have equality on the current fifth wave to the upside with the previous waves. So we see what is possibly going to happen now in lower time frames. Then now in daily time frame now, okay, so we see in daily time frame we have a lot of things, and I can start highlighting with the levels. So now we see we have this level, the horizontal support. So this was the resistance previously, price passed to the upside, then bounced, and then has come again here. So we expect now this level has high chance of rejecting prices straight to the upside, and we see the Friday candle respected this level and started building the bullish momentum at the same level. And at the same time, we see our level explained in the weekly time frame is passing at the same place. So also this provide another factor of confluence for the possibility of price pushing to the upside. And also we see we have the wave counts. Now we had push to the upside. So this current move to the downside is expected to be the ABC, is it has been labeled here. So it is expected to be an ABC correction to the downside. And now if you look on, or you do the Fibonacci retracement, so you can find that now it has already retraced to the key level, the 61%. So now this region is most likely expected to push or to reject the price to the upside. So in most cases we are looking up, but in 4-hour time frame we'll see now the possible levels for taking entries. But we have this level above here, so this is more clear in 4-hour time frame. Yes, so let us see the last time frame, that's the 4-hour time frame. Okay, so in 4-hour time frame now we see, as usual, we have this level expanding daily time frame, but in addition to that we have this channel where price was respecting now from the upside. Okay, so this turn here was made exactly like the channel, so price is approaching the upper channel. So what is going to happen here, price always when it hits a level which was respected several times, so is expected either to bounce away or to break the level, retest and continue. So now what is happening here, it is projected based on the wave counts also. So if you include the wave counts, you can find that now it is almost looking at the S1, 2, 3, 4, 5 to the upside. So basically, if it is the 1, 2, 3, 4, 5 to the upside, so the projection is going to the overall projection, and in consideration of this level to the upside, so the projection is mostly the completion of this, either inside be without breaking, then bounce away and break to the upside. That is one. Or in other ways, price may complete the fifth wave by breaking to the upside and then retest and continue. So in most cases, what I can say, and why I expect the bounce at this level, because this level is around 2400. So it's a very strong level that we have been talking about it several times in the past. Now we have been talking about the 2400. So it is passing to this level. So in most cases, price may respect this to the downside, may bounce to the downside, but later I expect to see further continuation. So the bounce will be a correction of this 5 wave to the upside. So it will be correcting to the certain Fibonacci levels. So once it is already completed, so we can measure the Fibonacci level for the purpose of taking buy opportunities. So now the key levels to consider is price will bounce the 2400. So price will bounce the 2400 to the downside, and we'll be looking for buys when the price is at the level of 2370. In most cases, I can suggest around this level. So it may go down as to this level. In any way, it is a range just from any point from the upside, and maximum it may be to the level of 2370. So if you see buy opportunities around this level, you'll be buying, and this buy, we cannot take that longer buys, so we can buy up to 2420, which is at this resistance to the upside. So when the price is already at this level, we'll be aware of the formation, whether price is going to continue to the upside or it will reject to the downside. So that is the overall projection, and this will be for the 5 days of the coming week. But remember, the NFP have much influence on the direction of price, so it may turn the price to other directions. So thank you. Have a powerful weekend.